Okay, good. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I've been giving every Monday morning the Asian session live market analysis and the forecast webinar every week. So that is mainly to give the session-wise forecast and also what is expected from the market. Now we have come to the fag end of the month of November and also the start of the month of December. So in this week, as I explained during the earlier webinar, that volatile moves are part of the game. So the players are expected to make very big volatile moves in the market in order to earn big from the traders. How they can earn big from the traders? So they have to make the unexpected moves of the traders in the market so that the traders should find it extremely difficult to read the intentions of the players and then lose the money. So if you want to earn money from that other market, a simple mechanism: expect the unexpected. So that is what I'm going to explain to you during this particular webinar, that Asian session live market analysis for this week, 28th of November to 2nd of December. You'll see the session-wise forecast for this week and also the levels in which the currencies are expected to swing. Besides, I'll also touch upon the trading strategy we should use in order to earn consistently from the other market. My contact details are given here. Either you can contact me through email, dr@i-knowindices.com, or you can contact me through Skype chat iknowindices@hotmail.com, or you can go to my website and from there you can contact me. Website address is www.i-knowindices.com. Let me explain the forecast part of it. So this is the trend reversal week, as I explained. The last week of the month of November and the start of the month of December in this particular week. So the players are expected to make the monthly trend reversal moves. Besides, during the month of December and January, they are expected to make the yearly trend reversal move. So you find the monthly trend reversals followed by that of the yearly trend reversal, and that will remain till end of January 2017. So be careful and try to do only swing trades and capture the profit whenever you see, and try to see that you are not caught vulnerably at the extreme levels. Now coming to the market, if you see today, Euro, GBP and Australian dollar, they were all around the same level on Friday what they have done, shown it. But USD has made a very big move. Last week, everybody was telling that USD could gain further upward and that could be unstoppable move. So that is how the players create that sentiment in the market and continue to gain the levels as one-sided gain. Then everybody will gain the feel that it is something like the carry trade. Any level you buy, you will be able to book profit. But last week it was true. But this week, they simply offloaded all their positions after building the highest level sells on Friday. And now they just hold the market at a lower level. When the traders think that, okay, this could be the support level and then try to buy, they will make further drop. So this is what they make during this monthly and the yearly trend reversal move. So you'll come across very extreme volatile moves in the market. Already we have seen the sample in the case of USD yen. The other currencies are also expected to make similar moves. So be careful while trading in the market. Sorry. So the expected market moves, session-wise moves during this particular week. Euro and GBP are expected to make a swing and firm up move during that of the Japanese session, followed by that of swing and slide during the European session, and then swing and rise during that of the US session. Then tomorrow they are expected to make a dip in the case of Euro and GBP and firm up, and then continue to rise during the European and the US session. On Wednesday, they are expected to continuously gain levels in the case of Euro and GBP and drop the level in the case of USDN and USD-CHF. Then on Thursday, they are expected to make the swing and slide during that of the Japanese session, and then swing and rise and firm up during that of the European and US session on Thursday. Then Friday, for the non-farm payroll, they are expected to make a dip suddenly and then firm up and pretend they could make further firm up. And after that of the non-farm payroll, they are expected to make a big drop in the market and then swing and firm up to a close during that of the US session in order to trap those who sell after the drop to go in for a short covering. Then afterwards, you find next week, the yearly trend reversal in the month of December continues. So during that time again, they are expected to make a very volatile and unexpected move. How they make the move? First, they will gain the levels in the case of USD-Yen, then drop in the case of Euro and GBP. Then afterwards, they continue to drop USD-Yen, hold Euro and GBP. As a result, Yen crosses will come down drastically. Then afterwards, they gain the levels in the case of Euro and GBP as the USD weakening move. And followed by that, USD-Yen is expected to gain the levels. So this is the way they try to make the moves in the market. So you need to identify that and don't try to correlate the currencies. And they make the regular USD gaining and the USD weakening move, followed by that of the contrarian move from time to time. So we have to identify when they are making the contrarian move, when they are making the regular moves like the USD gaining and the USD weakening move. Then you will be able to really understand how to take the positions in a market. There is a question that what is this webinar about? The webinar is with regard to the currency market forecast and also how exactly we should be able to see the intentions of the players. So don't be carried away with the trends and always keep in mind the quick moves or false moves in the market. And whenever they make quick moves, understand that they want to just reverse the market after two successive quick moves in the case of the denominator currencies USD-Yen and USD-CHF. And in the case of Euro and GBP, they make volatile moves. They gain, creating the bullish sentiment, and gain for the second one and simply reverse the market. So be careful while trading during the yearly trend reversal time and always aim for swing trade till end of January. Avoid position trade. Now coming to that of the levels in which the currencies are expected to make the swings. Euro could just swing from the 1.06 to 1.10 level. GBP could swing from the 1.2425 to 1.28 level. And USD-Yen could make a drop from 113 to 106 level. And USD-CHF could drop from that of 1.1050 to 1.098 level. And Canadian dollar could swing from that 1.3525 to 1.32. Australian dollar could gain the levels from that 1.7425 to 0.7775 area. So keep in mind that the players are expected to quickly gain the levels, and towards close of the week they are expected to drop all the currencies. Now with regard to the market trading technique, we note down the initial lows and the highs around 3:30 GMT from the live market code page. This is the live market code page. What you come across here, where you find the codes are continuously changing depending upon the market moves, and then we find out the GMT time frame and see from time to time how exactly they are making the moves in the market, in order to read the type of moves they are doing it in the market, so that we'll be able to take appropriate trading positions. Now, with regard to the initial lows and the highs in the case of euro, 1.0595 is the low, 1.0685 is the high. They are not breached the low or the high. Then GBP 1.2454 to 1.2532, they are not breached the low or the high. USD 111.36 is the low, 112.97 is the high. But in all, you come across the big swings, they have done it. More than 40 pip swings. And in the case of CHF 1. So, there is a typo. $1.0080 is the low, and 1.0141 is the high. They are not breached the low or the high. Then Canadian dollar 1.3460 is the low, 1.3538 is the high. They are not breached the low or the high. Australian dollar 74.33 and 74.76. They just breached 74.76 and went up to 74.80. So you know very well the commodity pairs lead the rally and lag behind. So only in the case of Australian dollar, they just breached the high, indicating that slowly they will make more and more of USD weakening move. So what you understand from the market. So soon after that when the election results were coming out, US presidential election results were coming out, they made aggressive gains in the case of euro and GBP and dropped USD yen, as if US dollar is going to be a waste paper. And as we have seen that the election results were coming to the close, they simply reversed the market and they said that, okay, this is what going to be the result for another 4 years. Then they started making the USD gaining move. Then everybody thought that till year end, the USD gaining move could continue. But what they have done, they continued to make the USD gaining move till last week and suddenly reversed the market now and started making the USD weakening move in a big way during start of the day. And later on, they are expected to make more USD weakening move in this week. And when people think that, okay, here afterwards it is going to be the USD weakening move, then suddenly they will reverse the market and start making USD gaining move after that of the non-farm payroll. So keep in mind that the players are here to create the market sentiment. When the traders think that, okay, market, we should do buy and sell, they will simply reverse it. Okay, then we should do sell and buy, they simply reverse it. So they continue to make these unexpected moves for the traders. So in such a situation, it is ideal to trade with hedging. So once you use the hedge order to limit the risk, then automatically you find that if it is hedged, you'll be able to do either way trades or simply protect your equity, conserve your equity, and try to trade wisely using the hedge, limiting the risk and maximizing the profit. So we can use the hedge instead of stock. And in the event if the hedge is making profit, you can sorry, do either way trades. So that's how you should be able to prepare your mind and look only into that of the live market code page. Only then you will be able to perceive the intentions of the players. And if you continue to see the charts and also the live market code page, you find that chart gazing is really helpful and which can easily indicate the supports and the resistance and what exactly happening in the market. Then you will be trapped again and again, because the players know very well the traders predominantly look at the charts, and then based on the supports and the resistance estimated, they try to take the positions. And the players, what they do, they extend from there on the upside in order to hit all the stops. Then the traders think that okay, the trend is changed, and then they go in for an alternative trading strategy. Then the players start making the drop. So this is what we need to understand. So the market sentiments are short-lived, and the players continue to create the market sentiment and act against that of the traders. And in such a situation, we need to understand intraday trend reversal, weekly trend reversal in order to make successful trade, besides the monthly trend reversal and the yearly trend reversal. Now, during this particular time frame, you come across the monthly and the yearly trend reversal. Within that, they will also do the intraday and the weekly trend reversals. So you will come across very big move happening in the market, and they are capable of making 150, 200 pips just like that in the market. And if you see many of the occasions on Mondays, you would have seen that the net change will be about 1 pip, 2 pip on the positive side, or 5 pips on the negative side, that sort of things. But when you look into that of the currencies now, the net change in the case of Euro is 73 pips from that of Friday close. And in the case of GBP, 31 pips from that of Friday close. And in the case of USD and 135 pips on the downside from that of Friday close. That is how they make the big moves in the market. And in the case of CHF, they made about 50 pips negative net change. So when compared to the Euro, they had just made less negative net change in the case of USD CHF. And Canadian dollar, 43 pips negative net change from the Friday close. And Australian dollar, 30 pips from that of Friday close. So they created the US dollar weakening sentiment, but extreme move is being done in the case of USDN. So they make use of USDN in order to create the market sentiment. On certain other occasions, they make use of GBP to create the market sentiment. So we need to understand which currency they are going to use in order to create the market sentiment and act against that of the traders. Then we'll be able to really see that trading becomes child's play, because no surprise happens in the market. Now coming to that of the trade recommendations. So around that of 1.0645 or 50 level, you can take a buy, and they are expected to gain the level to 1.07 level and quickly watch and book profit, and keep the hedge order to limit the risk at 1.0600. Similarly, in the case of GBP, they could make a small dip below that of 1.25 in order to create a bearish sentiment and hit the stops before making a rise. Then you can try to buy during that of stop ends on the downside and book profit during that of the upward move. And in the case of Australian dollar also, when they make another 15-25 pips downward move, you can take a buy, then they will try to gain quickly book profit. On a daily basis, you analyze the market, and session wise you try to book profit. Don't carry it for a longer time. Brenna's got a question. When you look at the net change to see which pair the players are handling first, do you only look at for the two that have the highest positive net change, or do you also consider pairs that highest negative net change too? You have to consider all the pairs where they have made more than 40 pips at a given time. So if you see that the spread between the high and the low is more than 40 pips from the start of the day in all the 6 pairs. So what they are doing it during that of the trend reversal, they are simultaneously operating in a big way all the pairs in order to bring big volatile moves in the case of majors as well as the crosses. And see, there is no distinction between the negative and the positive net change. So negative net change whenever the currency is the numerator, sorry, in the numerator, you call it as a positive net change when euro and GBP gain. And when the currency is in the denominator, you come across the negative net change. That is all the difference. But ultimately, the quantum of move we have to take into consideration. Then also, do you recommend placing orders for the intentional moves and holding on to it for 2 sessions? Yes, you can do. When you identify the intentional move, wait for the 2 sessions at the start of the 3rd session and try to book profit, but not more than that during trend reversal time. Now, these are all the market timings. So here you come across the session-wise times are given. Each session is subdivided into early, mid, and the late sessions. The early and the late sessions, they handle the majors, and mid sessions, they handle the crosses. So if you're trading in crosses, choose the mid sessions and try to enter and try to exit during that time. And if you're trading in majors, wait for the early and the late sessions and then try to enter into the market. And if you are looking for small swing trades, you can also do the early session entry and the late session close as a session-wise trade. Or during the gap time, when they make a false move, when they quickly gain, you can take sell. In first 30 minutes or 1 hour, they will make a slide opposite move during that of the session, can book profit. So session-wise, or sorry, the gap time false move trades you can do. Otherwise, the intraday trade, as you buy during that of the Japanese session, and if there is an intentional move on the upside, you can wait for the 3rd sessions rise before making a reverse and then try to book profit. So you can decide upon the type of trade by identifying the type of moves in the market. And during that of the trend reversal, they will quickly change the market sentiment. So you have to be very, very vigilant and try to keep stop at entry once the position makes profit. So what is the trading procedure? As soon as you take a position, either a buy or a sell, we keep 30 pips away the hedge order to limit the risk. And the hedge can be a replacement for that of the stop. Why? If the stop is filled, the position is closed. But if the hedge is filled, we do have both the positions, both a buy and a sell. In this situation, we can handle the buy like a buyer and handle the sell like a seller, so that you'll be able to find that both way trading opportunities provide. Only if you have a position in the market, you'll be able to trade. Otherwise, you have to necessarily enter into the market before aiming for any profit. And once you lose in 2-3 trades, then you hesitate entering into the market. Then automatically you just repent and say that, no, I identified a very good entry opportunity, but I was afraid, so I did not enter. If I had entered, I would have made about $1,000 profit. They are all talking in air. But what is more important is the realistic trading. So you have to necessarily see that you are taking a calculated risk. Simply blindly entering into the market and say that I don't mind taking a risk, it is foolishness. You have to take a calculated risk, and also you have to see that you keep the hedge order to limit the risk and use it for either way trading, so that you replace the stop with the hedge, so that you are able to keep tight hedge order to limit the risk. Take risk only for about 15 pips or 30 pips. And also when the going is good, immediately you keep stop at entry and eliminate the risk and remove the hedge order. Then in a profit making position, trail the stop and also trail the take profit order to maximize the profit. If you do it systematically, no player will be in a position to make it to lose money in the market. But what happens, we invariably think that we are smart enough, and in the process we find that we have committed a lot of mistakes. And normally a wise man avoid repeating the mistakes. Only the fools are known to repeat the mistakes. But we call ourselves as wise and continue to repeat the mistakes. But we still do not agree that we are foolish. Then there is a question from YouTube. How would the USD affect? So US dollar effect is going to be negative till Wednesday, and later on suddenly US dollar is expected to gain back again. So I'll come back on Friday, 2nd December, and try to review the forecast, what I have given it, and see how exactly the market has moved in line with that of the expectations or against, so that we'll be able to understand how dependable the forecast is. So if you've got any question, you can ask me. I'm willing to answer to those questions. Otherwise, I'll show you the expected market moves for the week. For the latecomers, you can just look into it and use it as a guideline for you to do the swing trades, every session-wise swing trades. And avoid over trading. You take only one position at a given time, and after booking profit, you go in for another trade. Market continues to give trading opportunity. Never feel that, oh, I missed that opportunity, because market continues to give the trading opportunity. The players are, first of all, making the moves in the beginning of the week for the traders to commit positions. Only then they start trapping. So you have to understand that. So they make swings in the market and then induce the traders to commit positions. Once the traders are committed, and predominantly if it happens to be a one-sided position based on the market sentiment, then the players act against the traders and earn their money in a big way every time they do it. So first of all, they have to fool the traders. So they want the traders to follow technicals, fundamentals, etc., so that the traders follow it and commit positions. Once they commit positions, then they use some excuse and reverse the market and say that the sentiments trend is your friend, but it becomes an enemy later on, because you find that you followed the trend, and without trading strategy, you have been laughing when the position was making huge profit, and suddenly see that the position makes huge loss. So they know very well that traders have got a very emotional condition, and such emotional traders can be easily trapped by simply create the sentiment and act against and say that No, no, no. This time it has gone wrong. Next time, if you follow the chart, you will be able to get it. Okay. This time you have gone wrong. Next time, if you follow the chart, use another technique, you will be able to earn money. So ultimately, you find that all the analysts continue to give various type of technical analysis, and they in turn, when you ask them, have you taken the position during that of the data release time? No, no, no. I want the market to settle down. Later on, I will enter into the market. Because if the fear is there in the mind, it is extremely difficult for anybody to commit a position in the market. And all the type of studies might be for others, but for not for themselves. So ultimately, keep in mind that we have to develop a system which is able to really capture good profit from the market. That is why I explained to you, identify the type of moves the players are doing it. Ultimately, it is a man-made market. In the man-made market, the players follow a very systematic procedure, and then if you follow that, you'll be able to really understand, okay, the market is predictable. And you find that I have given the prediction for the market for the entire week. So any doubt, you can ask me. I will be willing to answer to those questions. Any other questions? So I take this opportunity to thank FX Street for the facilities provided to present the webinar, and you people for your kind listening and understanding, and try to reflect on your trades, try to understand how you identified various entry and exit level, and they pretend to be right, and later on they happen to be wrong or trapped. Why it happens again and again like that? Then you will be able to really understand. Reading the intentions of the player is vital. Wish you all happy trading. See you on Friday.